Let's talk about something that sounds boring but could change your life: international trade policy. Right now, as of August 1st, 2025, a 90-day clock is ticking. When it hits zero, the price of everything from your car to your phone could shift, big time. This isn't abstract economics, it's about your wallet, your job, and America's next big investment. In Washington, a high-stakes drama is unfolding. You're in the front row. On one side, the administration trying to look tough on trade without making everything more expensive. On the other, South Korea saying, "We'll invest billions in America, but drop the tariffs." It's a geopolitical staring contest, and the outcome will shape our economy for years. Imagine your landlord raising your rent by 15%, but offering a new kitchen if you let his cousin fix your pipes. That's the deal on the table. The 15% rent hike is the tariff. The new kitchen? A multi-billion-dollar investment. This isn't a simple yes or no, it's a web of trade-offs affecting real jobs and communities. Why should you care? Because this isn't just about politicians and back rooms, it's about your future. Will a new factory open in a struggling town, or will layoffs hit? Will that electric car you want get cheaper or pricier? This 90-day ultimatum is a stress test for our economy and our politics. Buckle up, this is going to be one wild ride. Here's the core issue: a 15% tariff, a tax on imported goods from South Korea. The goal? Make foreign products pricier so you'll buy American. But this protection hits cars, electronics, and steel, stuff you use every day. When the US adds a 15% tax at the border, companies pass that cost to you. That's why your Hyundai or Samsung TV costs more. The argument: tariffs protect American jobs, but the global economy isn't that simple. American cars use Korean parts. Korean cars are built in Alabama by Americans. Tariffs blur the lines, sometimes hurting the very workers they're meant to help. A steel worker in Pennsylvania might keep their job, but an auto worker in Michigan could lose theirs if parts get too expensive. Every American pays a little more for a lot of things. This 15% tariff isn't just a budget line, it's a disruptor in a tangled global supply chain. It creates winners and losers, and the stakes are real. Now South Korea is making a dramatic offer to force America's hand. The question: stick with tariffs, or take the deal? The answer will hit your wallet one way or another. Let's see what's on the table. South Korea isn't just asking for tariffs to be dropped, they're offering a $29 billion investment in the US, the centerpiece. A state-of-the-art shipyard in the Rust Belt, promising thousands of skilled union jobs. It's a direct appeal to blue-collar workers who've supported tariffs. The second half, a massive semiconductor plant. In a world run on microchips, this is national security. The pandemic showed how fragile supply chains are. A chip shortage in Asia can shut down Detroit. South Korea, a chip leader, wants to build a cutting-edge fab on US soil. This isn't just money, it's a targeted solution to America's biggest economic pain points. Two problems, one offer: revive manufacturing and secure microchips. South Korea is betting the US can't say no. But the price? Drop the 15% tariff. It's a bold move. Can America accept? The clock is ticking. What's the next play? Here's the dilemma: keep the 15% tariff, or take South Korea's $29 billion deal. Path A: keep tariffs. Domestic industries stay protected, government collects revenue, but consumers pay more and risk trade retaliation. Path B: drop tariffs, lose revenue, and expose some industries to competition, but gain thousands of new jobs in a stronger supply chain. The economic math is tricky. Will new jobs outweigh those lost? What about the ripple effect? Construction, suppliers, local businesses. Economists are crunching numbers, but this is also a political decision. How do you tell a steel worker their job's at risk for a chip plant 2 states away? Or explain to a Rust Belt town why you turned down a new shipyard? The president is walking a tightrope: concentrated pain for a few, broad benefits for many. The stakes? Real jobs, real communities, and the future of American industry. The choice isn't easy, but it's coming fast. Which path would you choose? Let's look at the next hurdle. Enter the Jones Act, a 100-year-old law requiring ships between U.S. ports to be American-built, owned, and crewed. South Korea's shipyard sounds great, but the domestic shipbuilding lobby is panicking. They've had a captive market for decades. A modern Korean-backed yard threatens their monopoly. Maritime unions and shipbuilders are lobbying hard to block any deal that weakens the Jones Act. Their argument: national security. We can't rely on foreign companies for our ships. The administration faces a tough choice: anger a powerful lobby to unlock new investment, or stick with the status quo. The Jones Act, a relic from the 1920s, is now a major obstacle in a 21st century trade deal. Will the White House risk political backlash for economic gain? The answer could make or break the deal. The plot thickens. If the Jones Act is a wrench, the CHIPS Act is the whole poker table. Congress recently passed the CHIPS Act, $52 billion to boost U.S. chip manufacturing. Now, South Korea wants to build a chip plant here, but only if tariffs are dropped, not for subsidies. This puts the U.S. in a bind. Accept a private investment that achieves CHIPS Act goals, or insist on the official process. American companies who played by the rules may cry foul if Korea gets a special deal. South Korea is betting that a better trade environment is more valuable than government handouts. For the White House, it's a nightmare anger U.S. companies or lose a huge investment. The real question is the goal to build chips in America, or to control how it's done. The stakes couldn't be higher. The next move matters. As the 90-day clock winds down, it all comes down to politics, especially swing states. The shipyard is aimed at the Rust Belt, key to winning elections. Thousands of new jobs here could sway voters, but rejecting the deal risks political disaster. If the U.S. keeps tariffs, South Korea will likely retaliate, hitting American farmers in other swing states with tariffs on soybeans, pork, and corn. The administration is stuck. Accept the deal and anger protected industries, or risk a trade war that hurts farmers. Meanwhile, tariffs make electric vehicles more expensive, clashing with green energy goals. The choice: lower prices and more investment, or protectionism and higher costs. Expect frantic last-minute negotiations, maybe a phased tariff reduction or a partial Jones Act waiver. Whatever happens, the political fallout will be huge. This decision will dominate headlines and shape the election. The fate of $29 billion and your next car hangs in the balance. The clock is almost up. What will America choose? South Korea has made a brilliant move, offering jobs, investment, and security in exchange for free trade. They've forced America to confront its own contradictions: protectionism or open markets. The choice isn't just about jobs, it's about the future we want. Do we protect old industries or embrace new ones like advanced shipbuilding and semiconductors? This $29 billion offer is a catalyst, forcing a decision Washington can't dodge. It's easy to talk about bringing manufacturing back, harder to make the tough calls. So, what would you do? Take the deal and face the fallout, or protect the status quo? There's no easy answer. This is a referendum on America's economic future. The clock is ticking. Let us know what you think. This is your story too.